Hello, fellas, it's nice to meet again. Today I'm going to cover my personal investment strategy. As some of you were asking me in DMs, how do I invest during this bear market? I'm going to share this information gladly. Um, you got to know that this strategy was designed based on my vast knowledge of the technical analysis, the market structuring, the understanding how the market makers inflate and deflate the market and assets, um, and other indicators, and of course, most importantly, based on the market psychology. So I hope this strategy will help you understand why I didn't recommend anybody to invest in 2021 and 2022 mostly, and why I urged everybody I know to buy crypto by the end of 2019. So first of all, we've got to figure out why the most of the existing strategies on the financial markets are not that efficient anymore. So, to be frank with you, most of the crypto enthusiasts and newcomers, they do not have any strategy. They don't have any plan, no uh, no understanding what they are doing there, no discipline. They simply react emotionally based on the news, on the FOMO FUD in the crypto Twitter, on they listen to their YouTube bloggers who understand very little about investment and market flow. So they simply rely on others and react emotionally. Uh, but those who have this strategy, there are two most popular strategies on the crypto market. The first one, you know it, everybody knows it. It is the HODL strategy, and the second one is the classic one. I call it the classic one because it is commonly known and widespread by the bloggers and everybody who tries to tell you, narrate about any investment ideas. It is the dollar cost averaging investment strategy that came to the crypto market from the traditional stock market and traditional financial markets. So let's figure out why they are not that efficient for us and suitable at the moment. For example, let's start with a classic strategy. What it requires from us? It requires from us to invest only in the top assets that have high capitalization, high liquidity, and conviction, like top stocks like Amazon, Facebook, Apple, and Boeing, and others. And if we talk about the crypto market, it requires from us to invest in the giants of the crypto market like Bitcoin, Ethereum, Stellar, maybe BNB, others. And definitely, why is this not efficient at the moment? If we talk about the stock market, this strategy is not that efficient because now it works for the early investors and the investment funds, hedge funds that invested in the end of in the end of 90s and the beginning of 2000, who bought with a high equity, which we as retail investors do not have, and these assets they already are overpriced hugely. So, and the movement, the volatility of these assets is very low. For those people who invested early and huge amount of monies, every 10% move up makes them the new fortune. It makes nothing for you with your equity. So, and also this strategy applies to the crypto. For example, you would say, well, the Bitcoin has great potential. Yes, I agree, it has this potential, but there is a narrative from the crypto community and gurus that the more institutional investors and big traditional market players come to the crypto, the higher is going the market, and we will reach thousands of $100,000 a Bitcoin, or even a million, maybe someday, but not soon, because the more, and I repeat it every time, the more money, serious money from the traditional market, from the institutionals and hedge funds of the traditional world get on board with crypto, the less volatile it will become, and over time, and each cycle, the return from Bitcoin and Ethereum investments is going to decrease, and it happens already. And I warned everybody who was expecting Bitcoin above $100,000 this cycle. I was telling you the whole 2021, this is not going to happen. And as you can see, this is what happened. And it is going to get worse in the cycles to come. So basically, the classic strategy requires from you to find a good entry, but nobody is telling you where to find it, how low the market can go, how high you should not invest. And it requires from you make an additional investments. For example, invest gradually and monthly. So deposit monthly and invest. Doesn't matter where you buy, because the market on the exponential level, it goes up only. So it doesn't matter. I will tell you that it matters, because I followed a lot of people on the crypto market and stocks market for the past 2 years, and how they were investing. They were investing in the high zones, and they told everybody that don't care because the market will go up. It will go up, but it won't make you rich. This is the reason why we all here. So basically, you are blurring your average entry with these assets. So let's look at Bitcoin, and how would you invest gradually based on the for the past 2 years, based on the classic strategy. You would invest, look where, here, 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 and you would cover all the highs and medium levels, but you wouldn't hide the lower ranges. Of course, if you have enough money left and you wouldn't be scared, you would buy even here and here, but it doesn't matter. Why? Because the returns with each cycle are going to diminish on the top assets, and investing on highs and on every level of the chart leads you to that your average entry is going to be blurred, and your average entry will be somewhere here at least, or even higher. But what I suggest is investing in the lower zones, like this one, for example, like this zone, or this zone. How do I do that? That's the question that we will figure out. And your average entry is going to be much, much lower. That is the key, and it will play a high and the key role in your returns during the next bull run and during the next cycle. So, for example, let's stick to the get back to the hodl strategy. What it requires from you? It requires from you the love for crypto. You wait for a significant dip. Nobody is telling you what kind of dip that should be and how long, on what time frame it has to be for you to buy, to understand that you have to buy. And you buy it, mostly you invest all you have, and you simply hold for as long as it requires for you to become financially free. So basically, the hodl strategy never tells you where to fix your profit, and you have to fix your profit if you have to make money and become financially free to get onto another step up. For example, I will explain what I mean. So definitely holding forever is not the answer. Why are we doing this in the first place then, if we are holding simply forever? For example, the biggest disadvantage of the hodl strategy is the psychological factor. Most of the people start investing. They don't want to invest that when nobody's talking about crypto, and nobody's talking about crypto when it is in the lasting descending phase, when we hear no all-time highs, no new upside movements. So people invest when it is already too late. For example, let's take it from the 2018, when most of the people, they came to the market in 2018, like I did, for example, but I didn't buy these highs, for example, accidentally, I'll tell you, not because I was that smart. So a lot of people, they were buying Bitcoin when everybody was started talking about it. Nobody thought about it, give a clue about it before, but when they heard about it crossing the 18, 20,000 and 17,000, 20,000 price, everybody started buying it, waiting for some corrections, local corrections, and buying some. So those people who invested, they invested here in 2018. This cycle, people mostly started going nuts when Bitcoin crossed this 12, 13,000, and most of them even started selling. And also, if we talk about Dogecoin, nobody was buying it, nobody needed it until it broke 7 cents, and it was already too high. Of course, it went even higher, but the real attention it got from the non-crypto community, from non-crypto people, was when it was around 40 cents already, and everybody was talking that it is going to $1 100%. And this is where I understood that my friends, that I was urging them to buy, for example, XRP for 16-17 cents or BNB for $25, they didn't listen to me then. But now, when everybody was talking about Doge, they were coming to me, and even one of my closest friends was asking me, telling me that one of his friends is into crypto, and he is selling his car right now, when Doge was 42 cents, to buy Doge, and because it is going to $1 and higher, and he was urging her to do the same. It was a stupid mistake, and she was asking me what should she do, and I told you that she is not allowed to invest. It is totally foolish to invest in an asset that made 10,000 or I don't know 20,000% within the last year and a half. It is insane. The reward and risk reward ratio is extremely leaning towards the risk. Yeah, you could make some a good profit to double your investment at that point, but definitely you wouldn't take profit. And secondly, the risk to lose all your investment was very high, and this is what happened. the price came back to 7 cents as I predicted it, back to the place where our push and the takeoff took place. So definitely the biggest disadvantage of the whole strategy is that people react on emotions, and they come into market when it is already too late and the price is too high. So and only a few get lucky to appear to be in the right place at the right time. That is why I think these strategies are not that efficient at the moment. So these are disadvantages and inefficiencies that we already covered. And as always, let's proceed to my strategy. Why I call it the rounded bottom strategy. Why is it called that way? Because we have two types of the bottoms on the market. The first one is the V-shaped bottom. It is usually an event-driven bottom that has formed because of a sudden and quick spilling dump on the market as a result of some critical fundamental changes or events on the financial markets that lead to a mass sell-off. Usually such sell-offs are being bought back very quickly, and on the macro level they look like some kind of well-orchestrated macro squeezes within the high time frame range before sending the asset into a new higher range in the zones where the price has never been explored before. So, but I am looking for the rounded bottom. Why? Because rounded bottom is a fundamental market structural bottom that is being formed when the new cycle's ascending phase comes to an end and the market switches into a logical downtrend phase, lasting downtrend phase, which is accompanied by the gradual and consecutive macro descending. This kind of descending always ends with a climaxed spilling candle, after which the market starts a long-lasting range-bound accumulation phase that usually, after the completion of this accumulation phase, looks on the chart as some kind of more or less rounded bottom. Not always, but most of the time it looks like that. So, my rounded bottom strategy mostly is as fundamental as the rounded bottom and is focused on the accumulation process during the similar market conditions that we currently have on the market, allowing to accumulate safely and efficiently in the near bottom zone, in the way that will not allow you to lose your money in the long-term or mid-term run and receive the maximum return. It is going to be very useful both for experienced investors and for the people who have very little understanding of the market technical analysis or the price action. But mostly I made this, all the rules of the strategy are made easy to understand for the people who are new to this market and do not understand how to trade and how to assess the price situation, the price deployment on the chart. So let's finally proceed to the rules of my rounded bottom strategy, and we will analyze it with the examples I will give to you. For the first rule of the strategy is you should never start investing near the all-time highs and when the market is in an extreme parabolic formation on the daily, weekly, or monthly time frames. Basically, if you see huge green candles on the high time frames like daily, weekly, monthly, you should not invest. Never. It doesn't mean it can go higher from there. It can, but for your purposes, it represents extremely higher danger of loss than the reward, and it makes no sense for your long-term aspirations. It is the best place where the crowd is being trapped and becomes an exit liquidity for the big smart money. So you should remember, never invest on the highs, and if you miss the opportunity to buy in the macro lower ranges, you better start trading with leverage according to the trend. If it's ascending, then buy the dips until it doesn't work no more. But if you missed it, you should never start investing. You should wait for the new cycle. That is my rule. The second rule, never start investing earlier than the moment the major asset of the market, which is on the crypto market, is Bitcoin or Ethereum, drops by 50% from its all-time high. And it is very important for you to understand you should follow not the asset you are willing to invest in. For example, you want to invest in Solana, and you should not wait for Solana to drop by 50%, because when Bitcoin drops 50%, Solana can drop even more. So definitely you should focus on the asset that drives this market, which is Bitcoin here. So definitely why waiting for 50% drop from BTC? And the reason for that is that each new cycle, after a continuous ascending phase, Bitcoin gets absorbed by 73 or 84% from the all-time high. It is usually, but everything can change, of course, and it will change. But as long as the bull run is going excessively fast and without any significant retraces like it was this cycle, these massive absorptions will remain on the table. So you have to get it into consideration and remember that. So the next rule, you should invest gradually. How? First of all, I'm a guy that loves to invest, make concentrational investments. This means if I believe in an asset and I understand that it has a great potential, I am going to accumulate it. But now, based on the recent market events, we can understand that not a crypto asset, not a coin, can guarantee us, even with high investors behind it, with high fundamentals, none of them can guarantee us that they won't get scammed like Terra Luna did and others. So definitely for now, I would recommend you to, based on your equity, if you have enough money to allocate for this, I would recommend you to invest in 1 or 2 or 3 assets of your interest, not more. So, and you should invest gradually. How do you do that? Of course, depending on your equity capital that is at your disposal and the availability of making new deposits in the future. So what should you do when Bitcoin drops 50%? For example, we took the example of Solana. You split your equity in 4 to 5 pieces based on how low the market currently is. For example, if we look at the market right now, you need not more than 2 pieces of your, for example, you have $10,000 and you want to buy Solana, and you should split your if we would be at 50% loss on Bitcoin, you would have to split it in 5 pieces, but now you need not more than 2, I think. The next rule, each piece should constitute either a fixed amount or should be increasing by 25%, 50%, or 100% with each consecutive investment, the lower the price goes. So you are investing not chaotically, or when the price goes higher, you invest, the lower goes the price, the more you invest, or either the same amount you invest. For example, you have 10,000, you buy Bitcoin went 50% down, you buy Solana for $1,000. It goes lower, and this is the next rule. Each investment should be made not monthly, but each time BTC falls by 8-10%, calculating from the all-time high in the asset of your interest. This rule is for the newcomers who do not understand trading, the range supports, the trend line supports and resistances, who do not understand how to find a good entry. This is the rule for them. The others who are good in trading, they can do differently. So, for example, let's look at these rules on the chart. For example, we had this 50% drop on Bitcoin. Here's the high, 50%. This is where you start investing. You buy your Solana, for example, $1,000 here, and then you do not calculate. If it goes lower, you do not calculate from the previous previous purchase 10%, not from here. We are calculating from the all-time high. We bought here at 50%, then Bitcoin goes to 60%, and you buy your Solana when it reaches 60%. The next one, if Bitcoin goes lower, you calculate another minus 10%, 70%, you buy Solana. And this is how it goes. You either buy with each time we go lower, you either buy with a fixed amount or increase your amount. I would recommend increasing your amount, especially on the phases of the market that we have currently. So the next one, you have to, each time we go 8-10% lower, you should buy and increase, or either the same amount or increase the amount of your investment. And you should not miss any purchase, because the last two pieces of investment are the keys, because they will provide you with the biggest amount of tokens, and this is our purpose, and will become the backbone of your portfolio that will drive and give you the biggest return during the ascending bull run. And definitely I will show you an example of that. For example, let's look at our Ethereum chart. Sorry, I have to go through them again. So Ethereum chart. What if you followed this strategy in 2018 when the market started dumping? For example, you had $1,500 and you split it in 5 pieces, and you would invest. Each piece of investment would be worth $300. So after Bitcoin dumps 50%, you would buy your first Ethereum, not the whole Ethereum, the piece of Ethereum at the price of $734. The next one, for example, it is the estimate calculation. The next one, we lower going, you spend another $300 to buy more Ethereum. The next one, we are recovering a little bit, you don't buy anything, we are getting back lower, and we are getting lower, and you buy again. And the lower we go, the more you buy. So for example, and as you can see, these two last investments are the key, because you managed to accumulate the biggest part of them of Ethereum here, although you spent the same amount of money. So why it is so important? Because based on this strategy, you are not blurring your average entry, and it is going to be low. For example, if you started to invest from the all-time high zones and would do that with every dip, your average entry would be somewhere around 400, 500 or $700, somewhere there. And when the market reverses and goes parabolic and goes into a new price exploration like it did on the Ethereum, you would make much less profit and return than you would do. So if you'd invest everywhere on highs, your point of even is the point when your assets get worth the same amount you invested. So, but as you can see, according to this strategy that I am presenting you, we are getting even already on $168. Look at it. Based on this macro chart, it was nothing. The lowest investments were around $76 and $108, and at 168 we already got even, and from that time we only getting the profit, the pure profit. And you won't get that if you invest according to the classic dollar cost average strategy or the hodl strategy, unless you get really lucky. So definitely this is the strategy, and I suspect you have some questions. For example, if Bitcoin goes lower but your asset you are interested to invest in is strong enough and it doesn't go lower each time Bitcoin goes lower, should I invest? Of course you should invest. For example, let's look at I have a great example of Compound here. Compound went down 97% from its high. It was a very hypey and trendy asset during this run, but it got hugely distributed by the holders, I guess, even from traditional market, and now they drove it mostly into the oblivion. But here we are. Bitcoin kept dumping, and here we found a great reversal, local reversal, and since then we got sent by the market maker a little higher. I think that this is where the thoughtful market makers stepped in, and they sent and started accumulating and sent the price extremely higher here, because in order to save this asset from the oblivion if Bitcoin goes further into the capitulation. So, and it holds nicely here. So definitely if Bitcoin even goes now to $16, $14, $13, $12,000, I think this asset will not renew its bottom. It's either will find the bottom here or here, and this is why each time Bitcoin goes lower by 10%, we have to buy Compound, even though it doesn't renew its low. It is clear to me that the accumulation here has started, and they will keep it from falling lower than this line. That is, and the return, as I mentioned, the potential of return here is very big. So definitely it is worth, for example, accumulating this asset. This is one point that I wanted to mention. And the second one, this strategy has two concepts, two types. For example, the one that I shared, it is mostly a concentration type of the rounded bottom strategy. But there is also a diversified concept here. For example, if you don't want to focus on one or two assets, you want to build a diversified portfolio. So what should you do? You should follow all these rules, but with one exception. Each new piece of investment should be in different assets. For example, for me, let's look at sushi. I find it a good price for sushi at 90 cents. So the Bitcoin went lower, and I bought, for example, sushi at 90 cents. That's it. I think it is a good price based on where I expect this asset in the next 3-4 years. I expect a good return from here. So I'm good. My first piece of investment was there. For example, Bitcoin goes lower 10%. I'm not buying already sushi. I'm buying another coin. For example, I buy Solana if it comes to where I am expecting. For example, I understand market good, and I know that Solana will be around, for example, $20, and Bitcoin goes 10% lower. For example, Solana reaches $20. I buy already with the second piece of investment from the allocated amount. I buy Solana. For example, the market doesn't stop there, and it goes lower, and this time already near reaches my price that I wanted to buy it for, $2.40 for $2 or $2.50, and I do just that. So the rules are similar. You simply make your pieces of investment in different assets each time, and it guarantees you that you will make a great accumulation in the safe zone of the market, and you will not lose your money, and at one asset you will catch the bottom, definitely. So I don't know if you understood everything well. If something remained unclear, please don't hesitate and write your questions in the comments or whatever you want. I hope you will be successful and this strategy will help you. Goodbye, guys.